Hey traders, welcome back to Your Nifty Guy. I hope all of you are doing well. So in today's video, we are going to take a clear step-by-step look at how Friday's market behaved. I'll break down the opening structure, the intraday moves, the reactions at key zones, and the overall sentiment that the price action revealed. Understanding what the market did on Friday is important because it helps us frame what is likely to play out on Monday. After we decode Friday's movement, I'll walk you through my complete trade plan for Monday, the important levels on the chart, what I'll be watching at the open, how I'll react to strength or weakness, and the clean setups I'm preparing for. The idea is simple to help you trade Monday with clarity, confidence, and a defined plan instead of guesswork. If you enjoy these daily breakdowns, don't forget to like the video, subscribe to the channel, and share it with someone who trades Nifty. Let's dive right into the charts. On Friday, markets opened again with a gap down of 111 points to be precise. That is again a symbol or a sign to not actively trade during the day. Now, like I always said that after a big gap down or a big gap up, market usually first tries to fill in the gap. This is what exactly markets did on Friday. We opened around here, we moved up, filled the gap, formed a good double top, gave a good scalping trade on the downside. Now, I did not take any trades on Friday. I was caught up with something, some emergency at home. So I was not trading, but then again, I was actively looking at the charts on my phone. And because I have a trade which is ongoing, I'm not actively trading in the options buying scalping that I do mostly. But then again, I have a trade open from the start of this week around Wednesday, which is the option selling experiment that I'm doing. So that is the trade is open. So that is the reason why I was looking at the charts using my phone. So, but then again, yeah, this is the first trade that could have been taken after the gap filling, wherein markets reached this high, filled the gap, gave a small pullback. They could not break above this particular high and went back down below. So this was the first trade that could have been taken. Now we were looking to short the markets below this particular pullback, but then again, like I say, in case of a big gap up or a big gap down, avoid trading on that particular day. The reason, again, I will show it to you on a higher time frame. Market was mostly sideways, if you can see, without a clear structure. So if you use this particular tool to draw the structure in which the market actually moved, you will see that there was no clear structure in the market, right? So this is the sign of a sideways market, and that usually happens once the market opens with a big gap up or a big gap down, right? Anything 100 plus points on Nifty is a big gap up or a big gap down for me. So this was the first trade that could have been taken, followed by this long scalping trade around here, wherein markets made a new low, but RSI made a higher low, which is RSI divergence, positive divergence, and this was a good W trade that could have been taken on the long side for a scalp. Now, mostly if you see market was completely extremely sideways. We could also see this particular trend line, which I had drawn on the phone itself, uh, which was being respected in the form of in the highs, which were forming complete lower highs, and till around 250, market was giving us a sign that it's going to close near the lows, right? Now, it was also what I also felt was that market could try to fill in this particular gap, right? So this is an impending gap, the big gap up that we saw on Wednesday, right? So this was an impending or a pending gap which is there and looked like on Friday the market is trying to fill up this gap, but then till around 255, the daily candle looked very different than what it is looking at the close, right? Now, this move came in as a complete surprise to everybody. A huge amount of buying was seen in Nifty. Now, Abhay had messaged me on Instagram asking, "Hi, just before the 3 p.m. spike today, was it an SL hunting? What do you think?" Just trying to understand the day. Now, Abhay, see, the thing is, moves like this are something which nobody can be prepared for, right? Now, what can you do about such moves is this is the reason why I always tell you guys to have a valid stop loss and also respect it. So in case if anybody would have been in a short trade, say for example, you would have shorted the markets around here or around here, anywhere, right? If you would have been in a short trade and such a huge buying comes in, which nobody can be prepared for, or nobody can actually say that, okay, this is the place to actually go long. There was nothing as per the market structure which indicated that a big buying can come in from, right? So that is why I always say in the stock market, anything can happen. So that's the first rule, right? Anything can happen at any point of time. All you need to be do is not try to predict anything, but be prepared for anything, right? So, and from the very start of this channel, this is a constant saying which I say, and this is a rule that I abide by, right? So anything can happen in the markets, and you instead of predicting what is going to happen and reacting to it, it is better to be prepared for anything at all, and then trade accordingly, right? Now, this move for me is absolutely not tradable, but then again, of course, it would have hunted down the stop losses of many sellers, right? So all these people who would have shorted around here, everywhere, who would have kept the stop losses above the last swing, all stop losses triggered in 10 flat minutes, right? So these are events which will come in the stock market, and all you can do is to protect or safeguard your capital is to have strict stop losses and then absolutely stick to them, right? So well, yes, this can be a stop loss hunt. This can be a short covering. I did not look at the change in OI. Like I said, I was only looking at the charts, and this move came out of the blue, right? I saw this particular move when there are certain news st related to stock market channels that I have joined in, wherein uh, I got that message on my phone that there's a sudden spike in the market, and I looked. I didn't expect such a big spike, but then yeah, absolutely crazy spike. Now, is this a trap was this a SL hunting for people who are short on the market? Is it a trap for people who would have longed all the markets around here? Is it just a move to get their liquidity? Is something which we will get to know on Monday. If we get a follow through for this, do we get a follow through to this particular price action, the spike which came in, or are we in for another surprise? Now, what I also feel is I'll simply delete these for now. We don't need them, right? What I also feel is that Nifty is again the kind of price action that has been displayed for the last 3 days, right? That is extremely sideways. Now, do not look at it on a 5 minutes time frame, but if you look at it on a higher time frames, like 75 minutes, right? We are in this entire range sideways again. We'll also look at the daily charts. But then, see, like I said, with a big gap up or a gap down, markets will mostly remain sideways. If you look at the charts or the candles on a 75 minutes time frame, you can exactly see the price action throughout the day, except for this big bullish candle. Uh, extremely sideways, right? And as option buyers, any taking any trades during such times can be the odds will be stacked against you. Sorry for that. So that is the reason why I always suggest you guys to stay away from the markets in case of a major gap up or a major gap down. Now, we will start the analysis from the weekly time frame. Absolutely beautiful chart. This entire up move which came in, markets came, retested this particular trend line, re retraced to exactly the weekly time frame, point 0.5, took support from the point 0.5 zone and bounced back, right? Absolutely beautiful. On the weekly time frame, we are absolutely still the structure is bullish, right? So I hope you are able to make the structure out, and any movement above this high will be the continuation of the structure, and then we'll look at what possible retracements can we look at. On the daily time frame, markets are yet to reverse. The markets were in a bullish trend, and markets are yet to get that reversal candle, which is had we closed near these lows, right? Just try to understand what I'm telling. At till around 255 before the move came in, the price action was somewhere around here. The entire candle was a red candle, and had we closed below the lows of Thursday, this would have been called a reversal candle because the high would have been lower than Thursday's high, the low would have been lower than Thursday's low, and we would have got a closing below Thursday's low. But then the entire 10 minutes move which came in changed the sentiments of the candle, and from 7th of November, or basically from 10th of November, the price action on the daily time frame or on the three factors that we look at, which had changed to bullish after this particular down move which came in, is continuing, right? We have not got a reversal candle. Pullbacks, doji candles, absolutely fine. But then a candle fulfilling all three conditions was in the formation on Friday. Last 10 minutes absolutely changed the sides and changed the game. The retracement which did come in was not even steep enough to have tested the daily time frame fib levels. So these levels still hold intact and value for us. On 75 minutes time frame, we have this complete clear double bottom. In case if you guys are not able to spot it, I'll suggest a trick which is shifting to the line chart, and you can see a good double bottom formation and the break above the neckline. So for Monday, I'll be using this low to this high which has formed in the markets, and I'll mark this level, the 75-minute fib. All right, now we'll quickly jump down to 15 minutes for our trade plan. Just give me a second, guys. Do we have any good trend line coming in from the top? Yes, we can connect these two highs as well. All right. So for Monday, above Friday's high, we can plan for an early entry. If we want a safe entry, we can wait for this trend line or this high to be taken out, right? Depends on what kind of trader you are. But I will, since I'm biased on the longer side, I am willing to take a little bit more risk. And if it has to continue, it will be going in like this. And above this zone, of course, we are long. So in case if you have any doubts, I'll also be putting it down another trade pathway around here, right? Around these levels, if we find any positive price action, any setup on the buy side, we'll look at a buying trade. And yeah, below this level, we can plan for a trade on the short side. If we go back and if we're planning the trade on the short side, of course, make sure that you are trading with lower quantities and trading with a strict stop loss and trading with and trading your entries very, very tightly. Now, again, Monday is the expiry minus 1 day. So anybody who is into option buying and trading Nifty, make sure to shift your trading to the next week's options because you will be paying a slightly higher premium for your entries, but then you will be doing your capital a much needed favor. And this is the best thing that you can do by shifting to the next week's expiry on expiry as well as expiry minus 1 day, right? And of course, needless to say, around these, again, if we see some buying, we can look for planning buying trades, but mostly I believe we should continue the trade or the journey on the higher side. Uh, we can also remain sideways, so that is the reason why I'll try avoid trading in between these ranges. Another thing which can actually do is because, but then that needs a trending day. But then we can also keep a lookout for the trap setup that we have, right? In case if we get a closing above this or above this zone and then it fails, right? That can give us a good trade on the short side. So I'm not marking it out on the chart like this, but then again, of course, keep an eye out on the same, right? So Friday's last move took a lot of people by surprise, and let's see how Monday unfolds. Do we get a follow through to this particular price action, or this just classifies as a trap, right? So, all right, traders, that wraps up today's breakdown. We reviewed Friday's market step by step and built a clear, structured plan for how to approach Monday. As always, remember the goal is not to predict every move, but to stay prepared for the key scenarios and react with discipline when price reaches our levels and forms something which is in alignment with our setup. If you found value in this analysis, make sure to hit the like button, subscribe to the channel, and share it with someone who trades Nifty. Drop your questions in the comments box. All right, so yeah, thanks for watching. Trade safe, and I'll see you in the next video. Cheers, and thanks for tuning in, guys.